currency to the market, because it will be coming through the bank only. Because although it is being controlled by the Reserve Bank of India and it is centralized there also, lekin it will be issued by the banks. So what do you feel? How it will be helpful to us? Please let me know. Please inform to our members. So further, I want to say that this association is meant to impart knowledge to the members. We are 400 members with us. Now this webinar, I think more than 500 registration is with us. And all the member of the association, besides some bankers, some entrepreneurs are also there, available, which are listening to you. I think this is the background of our members, other things are there. Now I hand over to Dr. Mishra for his thoughts on that subject. Dr. Mishra.
Thank you, Mr. Gupta. It's actually exploration of no man land at this point of time. Let me begin from the beginning to make the issue little lucid. See, digital coin, a digital movement is universal. Now, we don't have like daffodils cannot say that I live in the tree when sun shines, it has to fall down. So similarly, digital currency, somebody may be pioneer, somebody may be second comers, but it has to come in the world because that is the ethos of the time. Because of that, it is better to be prepared and better to safeguard rather than evade. Now, you know, right from 1990, Reserve Bank of India is entering into some sort of monetary revolution or other. They started with ECS and they had a data system, and they are graduating that data system as they go for payment mechanisms or they go for this clearing system. Ultimately, they are expanding the same data system for this digital currency. Of course, had they other choices? Yes, they had choices. But the choices, like a spider web, the choices had issues, and they have to go for the optimal issue. First of all, why the bank came into picture? You see, it's a central bank digital currency. There are two models in the world. They call tier 1, tier 2. There are two models. In the one model, the central bank in small countries where I am advisor also in few of the countries where I find the central bank straight away maintains the account, issues the digital currency, and the people or the beneficiaries, they use, and it's a single tier model, no intermediation. But here in Reserve Bank of India decided to go hand over two things to the banks. One is banks are better placed for KYC or for anti-money laundering. Banks are a little better placed. So they thought that if the banks distribute, Reserve Bank produces, and if the bank distribute, then it will be a better controlled system. Then what Reserve Bank will produce? Reserve Bank will produce, you see, the currency has got certain, particularly three values, three virtues. One is first, the currency has to be a transactional system. We transfer value through currency. Number two, it is, you attribute to commodity or any other price in the denomination of currencies. Third, currency can be a store of value. We can, if we have got money, we think that we have got wealth. So all these things must be transferred to a digital currency system. And it can be best transferred if banks are the intermediaries. How? That we have to see. You see, touch and feel gives confidence to people about currency. But in a digital currency, there cannot be touch, but there can be some feel. Because of that, the feel factor has been introduced through tokenization. That's why instead of going for a digital number, they go for denominations, so that the people will have confidence in the system. We have same denominations as are available for paper currencies. The digital currency will have same denomination. And what banks will do? Banks will, banks maintain treasuries. They bring cash from Reserve Bank of India and they distribute the cash according to some kind of liquid management system like Miller-Orr model or Stark model, Bernanke model. There are various models. Bank anticipate. Bank have their own intuitive models also. Through those intuitive models, they go for cash management. Similarly, through the intuitive model, banks will collect token from Reserve Bank of India. But then, when the collect banks themselves have got transactions, interbank transactions, we say that themselves have transactions, and those transactions need not be in such petty denominations. And that's why it was decided that the digital currency will be divided into two parts. One part will be digital currency wholesale and digital currency retail. The digital currency wholesale will be maintained through a process called account process, and the digital currency retail will be maintained through wallet process. So banks, the digital currency account will be maintained by Reserve Bank of India themselves, because it will be only a transaction with the banks, mostly banks and financial institutions. The interoperability will be minimal. So that's why, we have got a gross settlement system. Similarly, there can be interoperability by a gross settlement system, and that is controllable. That's not a major issue. The major issue is the retail, because it will be slowly, it will grow into a very big volume. That's why Reserve Bank decided to have some ground rules. What are the ground rules? One is, as I told, token, because of the tokenization. Like they withdraw cash, the selected banks at present, the 4 banks, they will be graduated to 8 banks. They will withdraw those denominations, and those denominations will be maintained by Reserve Bank of India. They will withdraw those denominations and store it first, like they store it in the treasuries of the banks. So from there, the distribution will start. But when they withdraw, what is the currency notes have got a backup asset. There are certain gold standard, certain commodity standard, about 40% of it is value backed and all that. And so also, it is not that unlimited digital currency will be issued. Digital currency will be a constituent part of the same principle, because the Reserve Bank's, that section 22, whatever mandate Reserve Bank Act 1934, whatever mandate has been given, digital currency will be a part of that mandate, not over and above that mandate. So that's why it's not that banks will store infinite amount of digital currency. They will store currency according to their own currency distribution algorithm. So having done that, then we come to banks and their customers. As you say, you cannot have a UPI without a bank account. But you can have this digital currency. The beneficiary can have digital currency without a bank account. Then, if no bank account, what will be the interface with the bank? There will be a wallet. So this wallet has to be, so banks are essentially token service providers, TSPs. As token service providers, they will, you can buy the denominations from the banks through your wallet. But for the wallet, here you see, I'll not be always goody-goody. Whatever lacuna is there, that I can point out also. You see, when Jan Dhan account, we say universal bank account, we are attempting. Reserve Bank of India could simplify the matter by creating, instead of wallet account itself, and that would have been more viable. But however, they have gone for creating separate wallet. But this wallet has to be also these wallets are to be also like accounts, because they have to be, there has to be KYC of the wallet, there has to be, the operation of the wallet is nothing less tortuous than the operation of the account for a layman. Why I am telling you so? Now, the wallet will have to have two interventions by the banks. First, they will open the wallet on behalf of the customer. They will open the wallet. Whatever wallet opening procedure, that procedure has to be followed, and that verification has to be done. Thereafter, you see, security, we are talking of security. So the wallet has to have a private public key. So that means the device in which the wallet will be kept, at present is envisaged that it will be a mobile device or PC. I'll come to bank's intervention for a third device, which is being envisaged, but it is left now to the market to innovate. Reserve Bank of India has not been conclusive on that. The market has to innovate. In fact, in other countries, such innovations have been done. That's why they're trying to borrow those innovations from countries like Bahamas, countries like even Sweden has innovated. Anyway, that I'll come little later. Here, the first thing, they have to go for the key for opening the wallet. Second, there has to be a key for interoperability. That is transaction, every transaction must have a sort of key. And those keys are to be monitored and maintained by the banks. And that is the interface of the bank with the customer in the digital currency space. So if the customer loses that key, what happens? Again, the same procedure as is followed now for loss of password or loss of PIN. The same procedure will be followed by the bank. That's why the banks, why selected banks and CUG, that is why closed users group has been chosen at present, because they have to experience what is the hurdle level, what is the extent of problem that may be encountered by the intermediary banks and ultimately by Reserve Bank of India. To test that, they have gone for pilot basis. They have not gone for opening it to the whole country or whole target group. So the most important thing is to accumulate experience, find out the pain points, and for that, they have to go for, every bank or every customer, they have got different type of softwares, and those softwares, there has to be bridges to be created so that the software is unified. There are a lot of technical issues, and the customer experience also has to be factored into it. That's why the banks are now at present, they are allowing it to a closed user group. Not everybody, I can go and just start transacting. And so they're allowing it now to a CUG, that is closed user group, but that will be graduated to universality, and that will be geographical expansion, city expansions. So that will be done. That's a good stance by Reserve Bank of India, so that the banks will accumulate experience and will have a flawless launching of this technological robust thing. But second thing I want to say on this, the Reserve Bank envisages ultimately to make it popular, they want it offline. That offline is the greatest challenge to the banks. When it will be offline, it will be like a dongle or like a device, some device, and that dongle or device, etc., are left to the innovations, because when UPI or when RTGS, etc., were introduced, there also we gathered experience, we refined it. It's now running flawlessly. So similarly, here, now a device will be issued, and when device will be issued, there will be two technological problems for the customer, which customer cannot do anything. They have to only accept it. So what are the two? There is called something called, in every digital device, there is something called a trust element. There is a inviolate code in it, which cannot be edited at any point of time. So that trust has to be known to the bank, not known to the customer. In any case will not know. Even if he knows, he can't do anything, because only the manufacturer of the instrument can know that this device has got this kind of trust element, and that has to be taken into, and they call it there is a technology called POP technology, and that technology has to be built into that, and the customer will go with that device, go to suppose some ATM. Now ATM has to be redesigned. Instead of dispensing cash, now ATM will dispense money to these devices. So these devices are called offline devices. You will go and get it loaded or recharged in the denominations you want, and offline he can go and transact either online or offline with interoperability features. So that is a big challenge. Banks are not acquainted, or ATMs are not acquainted with this kind of business. So this will take some time. In fact, I don't think even Reserve Bank is in a hurry to introduce this. But unless this feature is introduced for 88 crore, that is 880 million Indians who do not have a bank account, who may not have the wallet-based, internet-based wallets, they may not be participant in this particular business, particular device or particular convenience. That's why this is left to innovations of the market and left for future. And one more point I want to know, because I think it will be, the talk will rotate. So one more feature I'll just tell about the banks. Banks, when they go for token dispensation, the banks have two roles. One is distributing it. Second, they have to keep the transaction secret, because you see, that's why Reserve Bank has not, for two reasons, Reserve Bank didn't choose blockchain, because blockchain is trustless and transparent. Trustless is okay, but transparent means any transaction by anybody will be known to everybody in the chain. And that is not the right thing for a mass-based effort. That's why they go for what is called our acid tested. Here acid is not our pH acid. It is acid is a technological word for IT, that about the data management. And you see, Reserve Bank has created a system of their own scalable data management system, but this system is good for control, but not good for what is called inviolate audit or inviolate transparency. It's not good for that, but that helps also, because people will have private transactions. So this wallet which I possess, once I withdraw it from the bank, I can transfer money to another wallet where bank need not be involved. So bank has to be offhand for inter-wallet transactions. So ultimately, the last wallet, if it goes to, suppose after a lot of transaction, lot of movement of the token, suppose the token is uploaded, two ways token can be uploaded. One way, it can be converted into paper cash, that has to be done seamlessly, or it can be surrendered to the bank. The wallet is extinguished. So that's why the banks will have the transactions, which is storage, wallet management. Then offline, there is a danger of double payment, because you see, offline it will not be updated in the bank's account, so there can be payment twice. So that has to be avoided, and that the bank should be able to reverse. They should have a capacity to reverse the wrong transactions. So, but that in blockchain, that is not possible. Here in the Reserve Bank system, they have this feature, and this feature will pose a lot of issues for the banks. And I think they will evolve a solution. And ultimately, the idea is that the beneficiary should have the same ease of operation through this digital currency as he had through paper currency. Can I be?
Thank you, sir. Thank you, Doctor, sir. I think you have covered very nicely. One or two issues which you have raised. To money, you are talking about the transactional value. and commodity exchange value. You're also talking about the store value. For digital currency, I think there will not be any store value.
Yeah,
Because,
you see, I know that I should have covered. You see, Reserve Bank had two choices, whether to give it a store value or not to give it a store value. So they decided to, at this point, no positive interest will be paid, so that people will not have incentive to store
right.
the value, because there will be no interest payable and it will be a dead asset in their one. But in Japan, for example, in Japan, they
So,
are doing a negative interest, not only zero interest. They're
right.
giving, if you keep digital currency for long, you have to
Right.
pay interest, 0.5% negative interest.
These are the issue I think which you have raised. Just I want to supplement the things because it had no store value. They must something in their pocket. So interest of the thing should be paid as you are mentioning Japan or other places. Second point is what you are talking about the innovation, sir. In Sevedan has done something, and what is the important issue which you have raised? I think our listener will be very happy to know your views. Like ATM offline, even you go to the ATM and recharge with the rupees, because in that you can dispense with the money, cash you are having. Lekin whether this currency can be dispensed with from the ATM, I think this is a very, very violent point, sir, which you have mentioned. And I think Reserve Bank or others should think over in that aspect, sir. Regarding aspect, what you're talking about the transaction secrecy. So, sir, whether the transaction can be secret for this? Have any view on that, sir?
You know, it can be secret at the top of the tree. It cannot be secret at the root. You know, at the root of transaction.
Sir.
Um, when you withdraw from the bank, it cannot be a secret. You withdraw from the bank. But the
Right.
secrecy, like bank has got, I withdraw cash from the bank. Bank is not tom-tomming or telling everybody that he has withdrawn so much of cash.
Sir,
So to that extent, the same secrecy will be maintained. But inter-wallet payments, bank will also not know. Like whom I pay cash for circulating my cash. Bank is not bothered, they don't know.
or it will be recorded by the RBI, no, sir?
That's what I'm
That
telling.
transaction
At
will
the top
record
of the tree, RBI will record only the dispensation to the bank, and banks will record when I withdraw money and recharge my wallet. But between wallet, whatever payments are there, they will be recorded only in the data system, because it's a token. So token movement will be recorded. It will be recorded in the data system, and Reserve Bank promises that that will not be used for disclosure of this secrecy. But I tell you, one of the underlying idea anywhere in the world, not only in India, is that there must be economic intelligence built so that the two things happen. One is anti-money laundering or black money, arresting black money. The second one is the monetary stance. The Reserve Bank of India can have an accurate monetary stance by understanding the policy pass-through behavior of the digital currency. You know, policy pass-through behavior of the paper currency is difficult to assess, but policy pass-through behavior of digital currency is very easy to assess.
Sir, I agree with you that aspect. Sir, when you're talking about the retail and wholesale, retail we can understand by the wallet. Or what about, sir, you are talking about the wholesale account, and how it can be materialized, sir? Without wallet, it can be done?
It will not be wallet based, because you see, like interbank transactions now, or for that matter, our NACH, that's Gross National Automated Clearing System. Similarly, that will be a there is no token also necessary for wholesale, and they will have a automated clearing arrangement, because that will be mostly interbank transactions, Reserve Bank's repo transaction or reverse repo transactions. So that's it. That will not need any token.
Mr. Gupta,
how the transaction will be there?
Sir, Mr. Gupta, the wholesale e-rupee transaction is already in the place right now.
Sir,
it is not in experimental.
That's what I'm talking, sir.
No, it is already. It is already in the place. The way the clearing houses were Indian clearing house was working. Clearing Corporation of India is working. Though the transactions were happening through RTGS and NEFT in other modes. Now it is done through direct through e-Rupee now for CBDC now. So this is account to account transfer. So the Reserve Bank of India is maintaining account of all the banks.
Okay.
And this transaction, which Dr. Mishra rightly said, there are two modes of doing a transactions. One is through account and other is through token.
Right.
These are two modes of transactions. So the wholesale or the lump sum transactions mode is through the account. So the RBI has opened account of bankers and financial institutions, and they are doing transaction from account to account. But this type of transaction is not feasible for the public because you have to maintain 1.4 billion accounts to maintain this. RBI is not equipped to do these jobs.
So they are not possible also.
So they have decentralized the distribution.
But that transaction is being taking place, sir. At present, I think what is the difference in that? When you're talking about the digital currency and the transaction from one bank to another, that is being taken place as you're talking RTGS or NFT.
No. This transaction is in real time. This transaction is done in real time. Other transaction takes some time. NEFT is there, something. So now they have already shifted from this method to this method. Retail transaction certainly will take some time, as Dr. Mishra has said. It is through a token system, and that will take some time.
It already started, sir. It already started.
Yes.
When we are talking about the wholesale, I think that should be a major matter is a clarification, something like that. So now I'm coming to Sri Ajay Vyas. Ajay Vyas, sir, I think he is our godfather, and he is also helpful to us in all aspects. He is Bachelor of Engineering Civil. He is Executive MBA. And he was a very important person for the bank, whether he was a UCO bank ex ED sir, and revived the bank from the net loss making organization to earning the highest operating profit ever within the first years as executive director. Resurrectedly, the bank has brought out from the prompt corrective action category under Reserve Bank of India after 4 years. Personally oversees are the launching, lending, and managing of the various business verticals, implementing a 5-year pronged strategy to convert the bank into retail bank. I think it is a major achievement for the UCO Bank. Under his leadership, he had done a lot of work. Sorry for that, was a tough problem. He's a skill, problem solving, and analytics skill, creativity and innovation, decisiveness, growth mindset, collaboration, clear communications, and team building. So he was pillar of that bank. UCO Bank was converting into a loss-making bank to a profit-making bank. So he was with us. Yes, sir, I'm thankful to you. Due to my third problem, something I
No issues.
asked for that. So, yes, sir, what I am asking you,
Yeah.
so we have discussed Dr. Mishra. Mishra has explained very clearly
Yeah.
how the Reserve Bank envisages the scheme of the digital currency. And he also talked about some challenges of innovations. And he also suggested what other countries are doing for that. Sir, I am asking from you, what are the various security risks around India for this currency? Because the cyber risk or some other risks are there. How you feel that? Whether this risk can be overseen or you cannot face any type of risk for using this currency? Have any views, Mr.
Gupta ji, thank you for this question and regarding the security risk involved in the digital currency. Let me start with demystifying the digital currency itself. Dr. Mishra has already given a very broad guideline, broad perspective about the digital currency. Few minutes on demystifying this digital currency. Firstly, it is as good as your physical currency. Nothing, no, there is no difference. It is only change in the form of the currency. You have now currency in paper or polymer form. Now you will have this currency in digital form. Other all features of physical currency will be taken as there in the digital currency. Now I'll tell you what. The denomination will be the same. Whatever, even the coins you have, the same type of coins you will available in the digital currencies. So the people doesn't have any problem. So all denomination of physical currency will be maintained in the digital currency. Secondly, even the numbers will be there in the currency. You have node numbers. You can't have same number on two currencies. Even in the digital currency also, you will have, the tokens will have numbers, and they will not have two digital currencies cannot have the same numbers. Secondly, so double payment will be avoided by giving these numbers. So people will also have the feel of the thing which Dr. Mishra has told, feel of the thing. They can't look at it, but they can have the feeling, yes, this is the digital currency. Secondly, the most important thing which a physical currency has to be brought in the digital currency, and that is called the privacy part of the things. Now, even there is a lot of apprehension and doubt about how the privacy, and you were also telling at the start of the seminar that once the audit trails are available, how the privacy will be maintained. This is the important thing. Now, what is happening right now in the system right now? As regard the technology part of the digital currency, the RBI is not very much concerned about the technology part. They are more concerned about the functionality of the digital currencies. So their focus, their policy document is on the functionality of the digital currency and not on the technology of the currency. Now, this technology part is left to the fintechs and to the bankers. Now, they will give the broad guidelines, the amount of innovation you can do, the way you can distribute the money, the way you can transfer the digital currency will depend upon the innovation and upon the banks. And what I personally feel, this will not be restricted only to ATM or to the mobile or to the laptops. All IoT machines, Internet of Things, or everywhere this digital currency will be transferred, will be used. This is what I personally feel. Lots of innovation will come. Lots of research are being done by international agencies also, banks, the countries also, and they will work it out on these things. See, there are multiple advantages of this currency also. First thing, the settlement risk will be avoided. So there is no intermediation available in the digital currency. There is no intermediation. Right now, somebody is playing intermediation. Banks are coming in. Suppose RTGS is there. RBI come in the picture. Banks come in the picture. You are doing NEFT. Again, RBI is coming in the picture. You are doing UPI. Again, NPCI is coming in the picture. But in case of digital currency, there will be no intermediation. Wallet to wallet transfer will happen. So the settlement risk will not be there. If I transfer money to Mr. Gupta, the money will directly grow from my wallet to your wallet without any intermediations. That is what the technology says, and what the RBI circular says like this. So, and people also get confused between UPI and digital currency. They say, when UPI is there, why you want a digital currency? What is the difference between UPI and digital currency? UPI is also as good as digital currencies, but there is a difference. There is a difference. In UPI, banking intermediation is required. So it is not as good as cash. There is no privacy. Data is stored. Your data is stored in UPI. Intermediation is there. If you need internet banking, you need all things. But in this wallet to wallet, probably through NEC from one mobile to touch and go, you will be able to transfer the funds. Because the currencies are, the wallet will be designed like this. So lots of, because this is as if you are keeping the currency in your pocket, the currency will be kept in your IoT. So these things will be there. Then secondly, the dependency on cash will get reduced. Almost we have the highest ratio of cash to GDP in world today in India. 30 lakh crore is the liquidity in market right now. Can you imagine? Highest in India, world. Cash to GDP ratio in India. Secondly, important thing, the government is thinking the saving on printing, on issuing of digital currency. See, if I issue a 100 rupee note and my expenditure on issuing a digital currency is 1 rupee, 99 rupees, I am saving. So that also is one of the, and this system will be very robust, very efficient, very trusted, very regulated, and very legal system will be there. So probably this is the reason why every government across globe are pushing for a digital currency. It's not India. Most of the countries, Dr. Abhisha has given name of Doha and some other countries, Bahama, they has quoted. England is working, Sweden is working, Australia is working, France is working on these currencies, and many countries are working on these models. And probably this will be one of the most, and you will, Gupta ji, you will not believe, in the G20 summit, one of the most priority item is digital currency. And they want border transactions, foreign transaction through digital currencies. So probably this is one of the important. Now coming through your question, what are the risks involved? I don't perceive much risk in doing these things. The only risk which I personally see is the cybersecurity risk involved, because this will be totally a decentralized process. So cybersecurity will be there, but RBI is already putting in place systems and the regulations for this, and probably bankers will take care of this, will build in a solid systems so that cybersecurity, because we can't use blockchains because they are the most secure method of doing. Here privacy is to put. So here DL technology has to be used. So they are susceptible to cyber attacks. So probably taking precautions and choosing the right technology, probably we can avoid this. But other than this security, there are multiple risks involved in this security. Probably because this is as good as currency, physical currency, the RBI need to inject more liquidity in the system. That is what I personally feel, because they can't remove the physical cash from the market. Now, once the digital currency will come, so automatically more liquidity has to be injected in the system. Secondly, very important thing is the monetary policy, risk to the monetary policy. Right now, physical currencies, the government has, the RBI has a control on the physical currencies. But once the digital currency will come, probably the flow of the currency will be so fast, so quick, that it may disrupt the monetary policy also. That is also the people feel. No country has an exposure to this type of risk. That is only the apprehension part which I am talking about you. Then RBI will have an increased responsibility, because this is also one of the major changes or risk involved. RBI will have to pull up their socks, because this is a different type of game altogether. It's not physical currency. They have a lot of checks and balances, but checks and balances in digital currency will be somewhat lesser in case of digital currency. So this has to be worked out. And obviously when forex transaction will come on the digital currency, the financial stability will also have issues. Then you have to reinvent your stability systems in the market. These are the things. So I don't think as per se ki many big security risks are available to this system, but certainly cyber security is one of the risks which I perceive ki this can happen to this digital currency. You are on mute, sir.
Sir, sorry for that. So actually, you touch very right point about the cyber security, which we also feeling is cyber security or internet problem, something. This is a minor thing, which we are talking about. Like an important aspect, Vyasab, you are talking about the monetary, how the monetary policy will be affected. I think this is a major aspect, and whether it will be affecting the, you can say inflation or something like that.
Absolutely. See, as soon as the further liquidity will come in the market, the inflation pressure will be there on the RBI. This I personally feel, because it will be very difficult once the demand. Suppose I'll give an example. Suppose tomorrow 10 crore people start using starting wallet. I'm giving examples. So this much of money, and they start withdrawing money from the systems which are deposited in the accounts. So this is a fresh liquidity which will come in the system, And that will
Sure.
create a pressure on the, not only the RBI, on the banks also. And I'll tell you another very good, see, this will also disrupt the asset liability management of the banks. Tomorrow, suddenly the money start withdrawing from their deposit accounts and going to the digital currency. What banks will do? Banks cannot stop it.
Yes,
Banks,
yes.
banks cannot stop it. Now, what banks will do? Banks will run to the RBI then. Sir, we are in problem. We have a asset liability mismatch. Now give us a funds. So immediately there will be a pressure on the banks. This may happen, this may not happen. But see, when we are evaluating the risk, we should look to all the possible causes for creating the risks. And this may happen tomorrow. People start opening their digital currency wallets, and they start mobilizing the funds to their digital currency. And I personally feel that even to control the digital currency, the RBI may also bring negative rate of interest. See, they may also pose a negative, because this is my personal view. It is not views of anybody. It is my personal view. To control the quantum of digital currency, the RBI may also bring in some measures like negative rate of interest to control these activities. This may also happen.
Sir, there is one issue which I am talking about. Some I read somewhere. Whether stability of the control growth will also be there for this?
Very difficult, Gupta ji, very difficult to say right now at this juncture, because it is premature to comment on these things, because we do not know what RBI, because RBI is not.
Any other thoughts, sir? Mishra, have any thought, sir? Mishra ji, have any thought on that subject? Stability of the growth?
You see, growth is a complex process.
Sir.
It's not only money dependent.
Sir.
Let me clarify. The first thing, the consumption behavior of the people and the production behavior of the source.
Sir.
These two will usher in the growth. And both of them, they need, one side they need wholesale money. The other side, what they need is cyclic money. In fact, it's not a one stroke, I withdraw the money from the system, but I come back to the system also. It's cyclic money.
Sir.
I come back to the system, take from the system and come back to the system. In the process, what happens? The friction is employment. You see, if this cycle is not maintained, if there are only wealth accumulators, not wealth creators, you see now what happens? We have more wealth accumulators than wealth creators. That's why there is unemployment. If there will be like Tata's, if there will be wealth creators, then there will be less of this kind of imbalance, distributional imbalance, Gini effect, what they call it, Gini effect. The Gini ratio will be distributive. So that's why purely because of the monetary circulation, the growth will have a direct one-to-one impact that cannot be envisaged. No such study has been done that liquidity, whenever there is a liquidity pumping, the Reserve Bank goes to neutralize it by some policy stance. So, at this point, we need accommodative stance for liquidity. We may not have accommodative stand requirement for the.
I understand, Dr. Vyasa, what I am talking about, the growth stability will be definitely affected, I feel. So what was the inflation?
Growth stability, I won't totally agree, sir. Growth stability will be affected by the policy behavior, fiscal policy behavior, rather than monetary policy behavior. Monetary policy behavior has got a limited, inflation targeting. Then you have this liquidity overhang targeting. There are 2-3 limited roles which this monetary system can do.
Okay, but what is the influence on the inflation, sir? What have any view on that?
Yes, inflation, it will be little easier for controlling inflation through policy stance, through digital process rather than through paper process. Because digital process, as Basa was just now telling, we can go for actually like Japan, when they found that it is creating inflation, they went for negative interest on the liquidity. So similarly, America has not yet gone for negative interest, but they have gone to for quite some time, they had gone for zero interest, even on near liquidity assets. The problem will be actually not the cash itself, but usage of cash, this usage of digital cash to take advantage of the opportunities, because opportunities will be taken by some opportunistic people. If they take advantage of this, because you see, money is money has got great power, then what happens? Inflation cannot be controlled. But if it is a normal transaction for your day-to-day usage, I don't think there will be any difference between paper currency based inflation and this inflation. Headline inflation is more on commodity availability rather than headline, what we call headline inflation. Core inflation and headline inflation, they're two different things. The core inflation is not money dependent, but headline inflation is opportunity dependent. If I hoard the things which people need, that will be inflation, because I have got a cash, I hoard things. So that's why this has to be monitored as much as it is monitored through paper currency.
Very nice. Sir, whether the bank deposit will be affected for this, what do you feel?
Banks are payment mechanism. Ultimately, they are the payment mechanism.
Sir.
Like they say that if you burn the lamp, your hand will have some oil. So banks do have deposits because they are the payment mechanism. Sir. If this lot of disintermediation done, payment mechanism goes out of the bank, then banks deposit will be affected. But at this here, fortunately, banks are again the intermediaries for the retail. So I don't think ultimately in the long run there will be any effect on the deposit. But short run there will be some, as he told, there may be some buckets. The asset liability mismatch may be there. Because their banks were managing the cash liquidity, and in the process, the cash withdrawal had a physical hurdle and all that. But now there is no hurdle; it is seamless. So that's why for some time there will be a little bit of imbalance, asset liability imbalance. But after steady state, maybe 6 months, 1 year after steady state, it will be business as usual. There will be no effect on the deposit.
Thank you, Mr. Sir. Vyas sir, you are there?
Sir,
एक point था sir. What role will be played for the cross-border payment? Cross-border payment का कोई effect होगा इस पर क्या?
अरे बहुत गुप्ता जी, I think this will be a boon for cross-border trades. This digital currency.
कैसे sir? कैसे होगा?
अरे, see, right now we have a lot of pain points in doing the cross-border transactions.
तो आपका वीडियो नहीं है?
मेरे क्या, एक मिनट, just hold on. वो क्या मेरा बैंडविड्थ का इशू आ रहा था तो मैंने वीडियो बंद कर दिया था. हाँ. तो इसमें what I personally feel कि this will be a boon for cross-border transactions.
Okay.
Right. Right now we have a lot of pain points there are lot of hustles, pain points and lot of friction in the existing system of cross-border transactions. Firstly, you need banks, initiating bank, settlement bank, then corresponding bank we require in settlements. Then subsequently, exchange rate is there, and you will not believe the cost of doing forex transaction is almost 6% globally. 6% is the cost of the amount of transaction you are doing. Oh. And it takes about 2 to 3 days for settlement also. Not easy. Right. And there is always a settlement risk. Always a settlement risk in case of cross-border transactions. Okay. So these are the major issues happening right now. So what is happening? Most of the countries, they are working, and especially the G20 nations, there is a agenda for cross-border transaction through digital currency. Oh. And now we are happy. India is leading the G20. Now we are the chief of G20, and our Prime Minister will certainly push this agenda in India, and we will start working on cross-border transactions. See, it's not easy. It is very easier to set than to do the things. I'm telling you, the cross-border transactions, because you have different currencies. So either like we do in In the trade, we have a common UPS, what you call it, common standard for transaction. So we can create a common laws for transaction and do the multiple currency transactions. This can be done. This is one model where, or we can do what? We can connect all the digital currency issuing banks to a common platform. And we create a common portal where transaction can take place. This can be done. And we'll write a common law. Suppose a Bank of England or Reserve Bank of India or Bank of Australia, they all have a common portal. And our digital currencies are placed on there. And immediately by coding, they get transfers. On real-time transfer takes place. Real-time transfer. This is one way we can do it. Or what we can do it, we can deal in multiple currencies also. I can, in my wallet, I can hold currency, US currency also, and Australian dollar currency also. This also I can have. This method, this is all on the paper. Research work is going on. Nothing is happening. There are few experiments already going on. I can quote those experiments where people are doing the experiment.
Very intelligent, sir. Very. I think this is a new thing you are mentioning about it.
So lot of things are there. So so I think personally this will be a big boon rather than doing a domestic transaction. Foreign transaction will be much better in digital currencies. Right now, exporter, importer have a lot of problem in transferring the funds. But once the digital currency comes, wallet to wallet transfer will happen. That will have a pressure on your capital account also. So government has to, checks and balances has to be put in place for capital account also. I am not talking about capital account right now because see, you need to build in checks and balances, but things will happen. And probably in coming days, the RBI will also do experiments with other banks for cross-border transactions. I have some examples. If you want, I can quote some examples.
Please.
Just give me 1 minute. I have noted down some. So, in a discussion paper for retail CBDC, Bank of England has discussed the possibility of central bank of working together with linked domestic central bank digital currency to ensure fast and efficient cross-border payments. Bank of England argues that this can be achieved through designing a common set of standards to support interoperability. So once you have an interoperability with UK pound, probably you can do with US dollar also. Who stops you? And what is it? This is a technology. This is a conversion now on the demand supply. Technology is in place now. So converting rupee into dollar is not taking place. So I suppose I surrender a 100 rupee note. Equivalent amount of UK pound will be transferred to the other wallet. So it's not a big deal. It's not a big deal. It can be done through technology. So probably cross-border transactions, it will happen. And I am very happy that this is one of the most bright area of this digital currency. Domestically, you have UPI, but internationally, you don't have UPI. You don't have UPI. In other countries, we have UPI-like solutions, but they are not interoperable. So this model of digital currency, if it become interoperable, then the cross-border transactions trade will happen like electricity. Immediately, you send a button and immediately, instantaneously, money will get credited to those accounts. So this, I think, and more trust will come in the business then.
Very nice, sir. I think this is a very great discussion. Now I'm coming to Neha Juneja, MBA Finance, co-founder and CEO of India P2P. Madam Neha is a co-founder and CEO of India P2P, an RBI certified platform for retail investors to invest directly in retail loans, earning high and predictable returns. Neha is a encouraging green fellow and has won several entrepreneur awards such as Business World, Young Entrepreneurs Award, L'Oreal Award, Femina Award for Science and Innovations and more. Madam, just I want from you, what shall be implication of this digital rupees for Indian economy? have Indian economy will have some implication of this digital rupees? Have any thought, madam, for this?
So first of all, thank you for having me. And I think Dr. Mishra and Mr. Vyas have already covered a large part of what the digital rupee can do. But I'm probably going to just summarize what they said. One thing is that the whole CBDC experiment is in a way digitization of the central bank. It is digitization of RBI's own process and how actually money across the economy. There's a big benefit of that is efficiency. Mr. Vyas was just about cross-border payments for importers, exporters. Private treasury. Yes, is a very clear positive. What that is very clear positive for the economy there. Just me, I like hello. Hello.
Yeah, you're audible. You're audible. You can continue. Please continue. You're audible.
I'm so sorry. I'm not sure what happened, but like I was saying, so there are some very clear positives for the economy. It makes the wholesale version of the rupee makes things efficient. It saves us money, and I also want to say that for even with UPI, we run a fintech platform, and a lot of fintech companies will tell you that UPI, the e-rupee, would be much faster because the settlements are faster and much more efficient than the UPI. The UPI is a 4-point transaction system. Transaction like bounces off 4 nodes before it is, actually executed. So there are is definitely a
Yes, madam. Some problem is there. I think please rectify your problem. Something.
which I seem to be. Am I audible now?
You're audible, madam. You're audible. Please carry on. Please. जरा माइक अपना ठीक कर लीजिए ना इसको प्लीज.
Yeah, we are not fully ready for technology.
No problem. We are getting you. Please go on.
Okay. So as I was saying that there are clearly some very clear positives in terms of efficiency, settlement times, and especially cross-border transactions. There are 2 unknowns. One big unknown is of course what the CBDC does to the authority or the control of banks. It in some way puts the RBI somewhere in competition with the banks in some sense. And banking is very critical to the economy. I mean, we need more credit in the economy, and banks are the essential providers of credit in the economy. So that is one unknown, and it's a big unknown, at least from my personal point of view. The other unknown, but an exciting unknown, is what this does to the unbanked or the underbanked. There is a reason why cash is still kind of king in our economy. You can just give somebody cash and they know they got cash. And sometimes even in cash transactions, you have to give cash to somebody who's in another city. So you will deposit cash here and they will withdraw cash somewhere else. All those kinds of things happen. And it will be very interesting to see what e-rupee or the retail e-rupee use cases turn out to be. There could be a lot of use cases for simple things like collecting microfinance loan repayments from women SHGs, etc., which are currently in cash, which would be a, kind of also a big driver of just economic growth. There could be rural use cases where dairies sometimes pay their farmers in cash. You can have some e-rupee, retail e-rupee use case there. So it will be very interesting to see, and it's of course on a lot of startups or technology companies like us also to figure out and make these use cases happen. But it would be very, very interesting to see that how this can help the unbanked and the underbanked. If we are able to do something in that segment, then we have actually utilized the full potential of this initiative and technology. I hope I was audible. I'll try to keep my answers.
Madam, just I want to ask from you, for this cryptocurrency, when we are talking about that and the digital currency, have any difference for that, and how it you will be affecting by this cryptocurrency will be diminished? What do you feel? It is alternative to cryptocurrency.
Well, I would say that it is firstly very different from a cryptocurrency. Dr. Mishra also covered this point earlier that cryptocurrency, or let's just talk about Bitcoin. Bitcoin is built on a decentralized public ledger, as they call it, which basically, if we are to simplify it, means that every transaction that happens on the Bitcoin network is visible to everybody. I can go log into the internet and I can see which wallet transferred money to which other wallet. Of course, I don't know who that wallet belongs to, but all of this is in the public domain, which is why sometimes online you will find that somebody is talking about that one wallet transferred 200 Bitcoin to another wallet. Those kinds of news keeps coming up. The risk of a decentralized blockchain, which is most private cryptocurrency blockchain, is the fact that because it's public, it's also cybersecurity management is a lot harder. It's a lot harder, and sometimes manipulation, or we have many instances of hacking, etc., on decentralized blockchains. The RBI CBDC is a very private architecture. It is, in terms of the basic technology, of course, it's all information technology, but it's still a very, very, very different architecture where it's not public. So you and I, or even banks, cannot see what transactions are happening from wallet to wallet, like the said P2P transactions or P2M transactions. There will be no visibility of that. And it also gives full control, very clear visibility to the RBI as to what transaction volumes are moving from wallet to wallet, and of course full control as well. There are many other differences also. For example, your private blockchains are, you generate a token by mining it sometimes. You generate a token by a predefined algorithm, and sometimes these algorithms are not perfect. Even mining, for that matter, is not perfect. I mean, in many ways, it's not perfect. But most central banks have adopted what the RBI has also done, where there's this inherent trust in an established process for as to how each and every e-rupee or token would be generated. So it's something that, as a person of the public, I inherently have more faith in and more understanding of. But yes, to summarize, very different, very, very different.
Madam, there is one question from this Mr. Samta Ahuja. So what he talking about? Will RBI calm down crypto noise with the CBDC?
So I think crypto noise is already quite a bit down, and RBI previously also, with the tax and the finance ministry with the crypto tax and so has already calmed down a lot of crypto frenzy or activity in the country. One of the main use cases for private crypto has also been cross-border transactions. You want to pay somebody in the US or otherwise, it takes not even 0.2 seconds to transfer a Bitcoin from a wallet to a wallet. I think some of those use cases, the CBDC will just diminish, if not eliminate. And lately, I'm sure if anybody's in crypto would have heard of the FTX collapse and other things, which has actually globally called for a lot of regulation in private cryptocurrencies as well. And maybe it might just lead to more central banks advancing their own CBDC programs.
Then one point, another thing he was mentioning, crypto can be disinvested, disincentive. But you also mentioned something like that. What do you feel that is disincentive?
So I'm not sure I understand the question.
Because it can be disinvested. We also mentioned disincentive.
So you can have, with private cryptocurrencies, you can, I mean,
Yes.
it's like creating your own world. You can do anything. You can have artificial pegs to an existing, currency like the US dollar or the UK pound or so. And you can also disincentivize people to hold a certain cryptocurrency by, I mean, you can have a negative interest rate on it, which you sometimes have on private cryptos as well. And you have crypto burn also, as they call it, where a crypto token just automatically extinguishes after a period of time. So that's another interesting thing about tokens is that you can very easily and very quickly introduce both incentives and disincentives. So it will be quite interesting to see if, Mr. Vyas said, that there's a negative interest possibly on the e-rupee.
Okay.
Gupta ji, another very important point which I want to share with you, the digital currency.
Sure.
See, it is equivalent to physical currency, but it has advantages above the physical currency. Now I tell you how. You can program the digital currency. You cannot program physical currency. There is no control on the physical currency, but you can program the digital currency. Suppose I am giving you example. Government of India is distributing the social benefits to the citizens. And suppose they have given to the farmers 2,000 rupees per quarter. The social benefit is given to the farmers. The government doesn't know where the 2,000 rupees has been spent by the farmer, because the amount is through UPI or through IMPS or any other mode through NASH, the account is get credited. Now, in case of digital currency, you can assign the usage also to that currency. And this is one of the greatest advantage to the government of India. So digital currency, suppose I'll give you an example. If you have given a government benefit for the health, the currency can only be spent in the health centers. You can't spend on food. You can't buy shoes from that. So that is also one of the major issues here in the digital currency. So they are programmable also, whereas the physical currency is not programmable. You asked one more question regarding the cryptocurrencies. I will tell you, in my opinion, crypto is not a currency. It's not at all a currency. Crypto is a commodity, basically. It doesn't fall under the definition of currency. Currency need to have an intrinsic value. Has to be issued by a sovereign government. So there are some characteristics of currency, and crypto does not have it. Crypto is decentralized, issued by anonymous companies, doesn't hold any intrinsic value. It depends upon demand and supply. So it is more or like a commodity. That is why when you talk about crypto, they tell it is a mining of crypto. When you use mining, it is a commodity. It is not a currency. It's not a currency. It's a commodity. And we use word mining for crypto. When we create crypto, we say we are mining cryptos. So mining में तो commodity होती, gold ही निकालते हैं mining करके तो. So they call it gold also. So it's a more commodity rather than a currency. So you cannot compare this digital currency with cryptos. So crypto has a different form altogether.
Yes, sir. Great thoughts about you. I think you putting extra mileage. What you are talking about, the uses of the funds also can be scrutinized by the this digital currency. That can be creating a disadvantage also for a labor or something like that. If they use it for the health to health, They can not use for the food or
No,
something.
I'm giving an example that this currency can be programmed also.
Yeah,
It,
right.
it, no, no. See,
Yeah, that is true.
the technology is giving you an
Technology can
option.
play a very important role under this digital currency. I think this is an
Yes.
important issue which we are discussing. I think we have discussed very thoroughly. Some brainstorming as are there, and some new things are comes up. Either we're talking about the innovation or we're talking about the ATM where you can have this recharge or some facility, something can be done. I think this is a good discussion here. So lastly, I am coming to Mr. Mishra sir, Dr. Sir. Have any advice to our, you can say, listener or our members for the currency, whether they can go ahead with the currency and they can try the currency, it is useful for them. Mishra, you have any view on that?
Yeah, about going ahead, whether me or anybody will have the same answer that go ahead.
Right.
Because you see, you cannot be moving backwards and
Yeah.
grow. It is a forward movement and it has to be done. But the only thing I would say that go slowly. You were talking about crypto.
Yes, sir.
Since you are talking about crypto, I'll tell you there is something called tulip mania. A tulip flower became as costly as $100, $5,000, like that, because of the people's craze towards tulip at that time, and they thought tulip is a store of value. So similarly, crypto is now a craze of the people, flair of the time. It doesn't have, as rightly told, it doesn't have intrinsic value and all that. But crypto is in the mind of the people, and it is a like we go for playing this what is called stakes. Similarly, crypto is a playing of stakes internationally. So please avoid crypto, because crypto is for, there's a first rule of investment and last rule of investment. The money you cannot afford to lose, don't invest. So,
And I want to come in here. I think this tulip mania, the crypto equivalent tulip mania, is kind of ending across the world. We've seen because of this very high artificial volatility, we've just seen so many issues in just the last 1 month that I think the crypto industry has kind of hurt itself by all that has happened. And very much agree that a private crypto, we sometimes keep calling it cryptocurrency, is not a currency. So in that sense, a comparison between a CBDC and private crypto is also not required, because it cannot be a currency. Currency by definition is sovereign, has to be, built by a central bank. So if anybody is listening, please don't think that you can, just Bitcoin is equal to money, because, well, it's not. It is
Gupta, but Gupta ji, one very important thing, cryptocurrencies has forced central banks to introduce CBDC. I'm telling
which is very good, which is a good thing. Which is
at least because there was a threat to the regulator that someday the cryptocurrencies will going to replace our currencies. So let us bring our own currencies. So this is also one of the reasons why these all governments and the regulators are bringing currency so fast. So they have an apprehension of this cryptocurrencies, because even the government started dealing in cryptocurrencies. Now the arms are being purchased and sold in cryptocurrencies. Russia is doing business in cryptocurrencies in these days. So there is a threat. So that is why this CBDC has come right now. And the government has expedited the process of bringing digital currency because of the cryptocurrencies.
I'll just add one more sentence. See, the majority of the cryptocurrency, about $68 billion worth of cryptocurrency, is held by the person who had invented cryptocurrency called that is Santoshi N. This is supposed to be a Japanese person, but it is rumored that Santoshi N no longer exists in the world. He is dead. So this currency is now immobilized in his wallet. Because of that, there is an artificial scarcity of the cryptocurrency in the world. Suppose somebody gets right of Santoshi N and releases that cryptocurrency, I'll tell you cryptocurrency value will immediately crash from 14 lakh to say some 1,000 or so, maybe some 100. That's why one should be very careful about cryptocurrencies uncertainty, volatility, and non-finality, particularly non-finality. Because many governments like India government may tomorrow create a hurdle and ultimately ban cryptocurrency. Then what happens? Where you will exchange it? That's why one has to be very careful about cryptocurrency. But about this currency, there is no such a hurdle. It is a legal tender and it is fungible, very easy to actually transact. And one thing, like Bassab was telling, that it's programmable. But programmable can be done both at a wallet level, if the wallet is a provided wallet for certain benefit, or it can be done also at token level. This programming can be done both at a wallet and token level. So it is with purpose and with transparency. That's why there is no problem in this kind of programming.
Thank you very much, sir. Vyas sir, lastly, you want to say something?
No, sir. I see a very bright future of digital currency. Don't worry. And people will say, and only apprehension which people will carry right now is regarding the audit trails available in the digital transaction. The Reserve Bank of India, the bankers, the commercial bankers need to evolve some technology which will destroy all the digital footprints. If this RBI and the commercial bank is able to do it, though RBI has promised this. Yesterday, I have seen the speech of a governor also, and where he has promised that anonymity will be maintained. So if this is maintained, this will be a big success. And I think in the foreign trade also things will improve. And Modi government will, within a period of 1 year, before the next election, you will see the cross-border transaction happening in the digital currency. What I personally feel.
Very nice. Dr. Mishra, sir, have any view? Lastly, you want to say something?
Already we have discussed. We can go on discussing, but only one point at all. You see, anonymity is by intention, not by mechanization. It is not possible. So that's why we would always expect Reserve Bank governor or the government, they will have good intention to protect their citizens for what they want, not what government wants or what RBI wants to manipulate its citizens. So it all depends on intention.
Thank you very much. Neha, you want to say something?
So I just, if there are any entrepreneurs watching there, I just think that we should quickly think of good use cases that take this technology, like I said before, to the unbanked and underbanked, because I think that's one space where private innovation will really make this as valuable of an intervention as it can be. We often forget people who have to deal in cash because there's just no other option. And it's difficult. Sometimes it's very difficult. And if that difficulty can be removed with this technology, then we must do it as soon as we can.
Thank you, madam. Thank you very much. I'm really at the last time thankful to Dr. Kailash Mishra. I think he's very educational man and he's very, very thorough on the subject in other respect also. So he has given some innovation ideas and he has given the offline system where it can be operated. I think who the listener or the ministry can see to his ideas, how the other countries are doing the things. I think thankful to Dr. Mishra Kailash Chandraji for your valuable guidance to our participants. I am thankful to respected Vyas sir, who is always obliged us to bring all webinar with a short notice. So he's coming and giving his views. His views are always appreciated by all the participants. Even today, I'm just saying, so people are thankful to him for his great views. What you're talking about the cash holding to the GDP, I think is the highest in the world. So this is eye opener for all of us. And he also telling some innovation, privacy, and he also suggesting that this digital currency will also of the day and cross-border transaction can also be done through this digital currency. I think this is a very important aspect. And he also talking about the common platform can be there so that all the days can be avoided, 2 or 3 day remittance or receivable can be avoided, and it can be cross-border transaction can be very easy. I'm thankful to Madam Neha also, who is taken very cryptocurrency. Is not a currency. She was talking about so many things about that, and Indian economy, how is it affecting. I'm thankful to Neha Madam also. Lastly, I'm thankful to all my members, all the bankers, friends who have joined with us, and all the entrepreneurs for sparing their valuable time always and giving us the opportunity for to interact with you. This association belongs to you, sir. So I request all the listeners who are not our members, let they should opt for our membership so that we are not charging anything. Only point is we are sharing knowledge. Our object is something different that we will see that association can be recognized somewhere. I am also director of the research in India, who is a merchant banker and investment banker also. We are conducting a technical economical viability study and government advisory business also. So we are giving a training to the banker, to the PSUs, and holding so many webinars. Under the series of the association, we hold this 28th webinar, and under the series of the research in India, we got the about 30 webinars. Besides that, we are also knowledge partner for the SHM, PhD Chamber, CIA, Federation of India. So many other organizations, we are putting our knowledge sharing platform. So at the end, I'm thankful to my team, which is now seen on the screen, like Sri Joginder Singh ji, who was very helpful to us. I'm also thankful to Sri Rajendra Kumar Parida ji and above all, Mr. Lokesh. So he's also, you can say, my helper in case of I am not getting some, you can say, internet connection or something like that, technical problem. Lokesh is always helpful to us. So he's suggesting me, Gupta ji, आप इसको ऐसे करो, ऐसे करो. Because unfortunately, morning session I could not do it in spite of the one bank where I am sitting. They have helped me to provide the internet to connection to me also. I'm sorry for that. They can still, I'm thankful to Lokesh for your wholehearted support to me and all my team members. For every week, we are doing such webinar and getting the appreciation from the other people. Now we also plan for next week webinar. I think for that we are requesting all participants if they can also join again, so that your feedback is important to me. If you can give me your real feedback, what you feel, I think that will be helpful for the association to further improve ourselves. Thank you very much. In the end, I'm thankful to all my eminent speakers, all my participants, all my staff who has given full support to me. Thank you very much. Thank you, sir. Thank you very much.
Thank you, sir.
Thank you very much. Thank you, sir.
Gupta sir, thank you. Thank you.
Thank you, sir. Thank you, Mishra ji.
Thank you,
sir.
Dr. Mishra. Thank you, Neha, for
Thank you,
joining.
Neha.
Thank you, sir. Thank you, sir. Very nice listening to you.
Thank you.